Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 22nd, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. On Friday, we bled out $1.26. Not too bad, to be honest. It wasn't a dramatic big drop. I don't think the fear is put into the market just yet. It could possibly potentially just be profit taking. A lot of people do profit taking before the weekend simply because they don't trust of what may happen in Europe or what kind of news may happen over the weekend, and they don't want to take the chance, so they take profits. And that's not unheard of, and it's not a very big pullback in my opinion. In the previous video, on Thursday's video, we talked about this doji candle being a possible reversal. However, it was done on a lower volume, so I could not validate, or this was not a valid reversal candle in my opinion, because it didn't happen on substantial volume. The volume was definitely higher than the previous days, but I normally like 3 days of volume before considering a doji candle to be a reversal. I mean, if you look at these two doji candles here, both on lower volume, and this doji candle here, these two actually both on lower volume as well. What I like to see is volume like this. Anything above this blue little line here, this line here is the average, which is about 150 million. Anything above the average, like this candle over here, if it was a doji candle, then that would have been considered, in my opinion, a reversal candle. So anything like haramis, or I really don't like haramis, but hammers, shooting stars are two of my favorite. Doji candles are also my favorite, including that the engulfing pattern is also a favorite. But engulfing sometimes is good because you can jump in after the move has already been made. A lot of times once the move has been made, I do not enter the market simply because it's too late. You'll be chasing, you know what I mean? But if it's an engulfing pattern, then it's, in my opinion, not considered trading, because it's an actual completion of a two candle pattern indicating a possible reversal. So we had this doji candle, and then I did mention I wasn't sure if this 137.74 level would hold. This candle closed here at 137. Let's see, 137.73, which was 1 cent off. This mathematically calculated level is about a cent off, which is not bad. But it doesn't always happen like that. So I just like to see it come close like this, but it obviously never, it's not always that close. Okay, so in any case, this 137.74 level held up pretty good. Today's volume, or Friday's volume I should say, was a little higher at 142 million. Okay, so as you can see from this candle here, this red candle was 104, 142, about 143 million, and this one here is 138, maybe a 139 million. As you can see, as I said before, this candle was higher than the past previous 5 days, which is telling me that this could possibly indicate a breakdown. Normally, again, any breakout pattern or reverse. Okay, so here's the thing: if you break out of a level, or you break out of a consolidation period, you need to have substantial volume to validate the price. Okay, again, it's not always 100% that way, but chances are the odds will be in your favor that it will be that way. Okay, so we have a breakdown. This is a breakdown because this is a reversal on substantially high. Well, okay, I wouldn't say substantially, but I would say definitely higher volume. We didn't break the average. We're pretty much right at the average, and that, and it's been higher than the past previous 5 days, which is basically telling me that we may have a potential of continuing lower. But I don't know now if we're going to actually break down from this lower trend line here. Okay, like I've been saying, I thought that maybe we would break down here, and here's the reason why. First reason is we never made it to this upper trend line here before turning over. Okay, and then we didn't only just turn over gradually, we actually gapped down. Here's the interesting part about how this works. Because it turned over a little early, it is possible that we could break down, and one reason is because we've made now, well, this would be pretty much a double top and a higher high, but yeah, this is still a higher high. So yeah, so in any case, I'm not sure if this would be the leg that will actually break down from this lower trend line. And it's just because the volume wasn't really, crazy. Like this volume candle here was 230 million, versus this candle here, which is 142 million. So there's going to be some discrepancies because Friday is normally a low volume day. Okay, so let's just say it was Thursday that we had this move on a normally higher than normal volume, with a little bit more of a sell-off, then maybe we could have gotten that 230 million volume if it was maybe a Thursday. But because it was a Friday, it was still higher than normal, but it wasn't exceptionally high because it's normally low volume on Friday. If you guys understand where I'm getting at. So if that's the case, then that means basically on Monday, which is tomorrow, we should continue down because this should actually have been higher volume. We can take a look at the VIX and the dollar to validate that. But again, if we cannot break down from this lower trend line here, then we will see some support at this area here. So if we create another doji candle of some sort on higher volume in this area here, then we may actually have one more leg up before coming back down. Okay, so that's a possibility. In fact, let me do a quick calculation now. Well, speaking of calculations, if you guys have been following me in my previous videos, these calculations have been holding up pretty well. Okay, I mean, they're not perfect. Obviously, nothing's 100%, but they've been holding up. And you notice there's more and more lines, and before in the older videos there's just one line, and then now there's like three lines or two lines at least. And the way I like to play it is that as the lines get closer together, it substantiates the price movement of a reversal. So let's just say these two lines here were pretty close together. Did it reverse at those two lines? No, it actually reversed at the upper line here. But if you still had taken the trade at these two lines here, right, it would have popped up above the line, but it would have been okay because it pulled back right underneath these two lines here. In fact, let's just take a look at what happened on the intraday. So this is the intraday chart. It's a 10-minute chart of the SPY. And so we have the start of the day there and then the end of the day here. As you can see, we actually gapped down right under the 137.06 level, went right into it, then bounced off again, then bounced off again, and then continued down, and now we're bearishly consolidating. So because of this bearish consolidation, we may have continued downside for Monday, but this is a 10-minute chart, and when you have the weekend to consider in a 10-minute chart, there's a possibility that this thing could reverse, and because it's just an intraday chart. Obviously, the higher the time frame, the daily will trump the 10-minute, or the hourly will trump the 10-minute, and the daily will trump the hourly, and so on and so forth. Or the point I'm trying to make is I'm always trying to improve these mathematical calculations. I mean, when you're in the business of being a trader, you always have to update your software, your techniques, and because emotions change based on economical data of traders. So if economical data, or if everybody is pretty positive about our economy and there's no bad news coming out of Europe and whatnot, we have charts to determine what the emotional or what the general emotions of the traders are doing. But we also have to upkeep our mathematical equations, because the mathematical equations, although it's been working pretty well, it's always good to try and pinpoint things to get a little bit closer. So you're going to see some purple lines on my charts that I'm probably not going to talk about very much, and those are the new calculations, and it's just going to be single lines instead of these bunch of lines. Okay, so it's a new mathematical calculation, and it also, in addition to this calculation, it helps me to read the numbers a little bit better. So the equation, or the actual input of the numbers to get the result of the number, should hopefully be a little bit more accurate. So when you look at the purple lines on the charts, don't really pay attention to them too much, but it's just going to be more of a test phase. Like these pink lines, back in the day, or not too long ago, I was testing these pink lines, and these pink lines have been holding up pretty well. Okay, these gray lines still hold up, but the pink lines have been holding up pretty well. And again, the pink lines are based on percentage, and the gray lines are based on solid numbers, and the purple lines are going to be based on kind of like a combination of the two together. So I don't have to have so many lines on the chart all at one time. But again, I'm just going to test it. So I have a lot to talk about because I have to go through a lot of charts today. So I'm just going to move on. Sorry for the a little rant here, but I just want to explain these mathematical calculations so there's no confusion. First of all, it's not 100% guarantee. Second of all, I'm still working on it. It's a work in progress, but I just wanted to let you guys know in case you've been following my videos and you see these purple lines and you wonder what they are. All right, so in essence, just a quick review. We didn't hit this top level here of this upper trend line here, which tells me that this may actually bounce up. We may actually maybe have another down day possibly, and then just bounce up and actually hit this upper trend line. That's also a possibility. And we need to keep that in mind. But it does look like right now that I would be more, I should say, short-term bearish than bullish. But what I would say is this: either we wait. We're kind of like, if you look at this upper trend line here, and you look at this lower trend line here, basically in the longer term, or before I actually take a trade, well, I'm actually into two trades right now, but before I actually take a big trade in the actual market, I'm gonna need to see a potential close either below that trend line or be above that trend line there. Any breakout of these two trend lines here on volume is basically where I think the direction is going to go in the markets. Now, if say we break up here on higher volume and then we confirm the next day, then this would be pretty much, in my opinion, a failed pattern, because the long-term pattern is bearish, and a failed pattern, let me tell you, is, I'm pretty sure we're at least going to get up to this level here. Okay, if we break out of this upper trend line and confirm, if the pattern actually plays out, then we have this potential downside with interim support at these levels here. Okay, so you guys kind of see what I'm getting at right now, right? So if we break above, it's going to be a straight shot up. If we break below, we're going to have some support here, and obviously this will be your major support down here. Okay, so just keep an eye on any type of breakout. If we break down on Monday past, and we actually closed below this bottom trend line here, because they saved it on this one and we actually did break down here. I mean, that's definitely a possibility. If we close below here on higher volume, then yeah, I'll probably take a short trade or find at least charts out there that are in resistance and look like may have some weakness. Okay, all right, this is a chart of the UUP, which is the US dollar. Let me load my drawings up here. So we went right into this 2280 level and this 20 moving average. Actually, looks like we tagged the 20 moving average, and then we opened right above the 2280 level, and then we closed right on the 20. Sorry, we opened up here, we went all the way into the 20 moving average, and we closed right above the 2280 we closed at 2281, so that was 1 cent off here as well from the mathematical calculation. And then we actually got some support. So in essence, on the SPY, we bounced off of that 137 level, and then now on the UUP, we're bouncing off of the 2280 level. So those two gray lines so far have been about 1 penny off on both charts, which is not bad because it's inverse to the markets. Okay, so obviously the mathematical calculation worked for both, even though prices were different, and prices are always different. It's just more of a tick for tick versus price for price. But when I do see mathematical calculations coincide together like that, where the SPY would bounce, you know, bounce off the roof and the UUP will bounce off the floor, then that's pretty substantial in my opinion. So the UUP got a nice bounce. The UUP could definitely at least bounce all the way up to this level here, maybe in between these levels here. We're also going to have some resistance on this level here. So as you can see, there is still some ways to go before we could get a potential bounce back down. But again, the UUP or pullback, the UUP is definitely still in a confirmed uptrend, which tells me that the markets are still in a confirmed downtrend, and therefore I'm going to wait till the UUP goes a little higher before I take a short. I'm sorry, a little lower before I take a short. I said that this would be substantial. We could still get into this level here or continue higher. So it's kind of like right now we're right in the middle in between the two. So we're in the middle of resistance up here, and we're in the middle of support right here. So this candle is kind of like in the middle of these two. So I'm gonna have to watch to see if there's a breakout from up here or a breakdown from down here. I highly doubt we break down over here unless there's substantial news that comes out that really scares people or makes people happy, I should say. and then the dollar breaks down from these two levels over here. But this is a pretty strong support in my opinion. I really have to learn to trust my mathematical calculations, because if I had trusted this as much as I should have, then I would have been able to determine that the bounce would have been substantial off of here. But I did think that we would have a chance of getting down here, but we actually got the bounce off here. We actually talked about this having a potential bounce off the mathematically calculated level. I've been talking about that a lot, but it was just more of a just in case we did bleed through it, then our next support would be down here. So, we are definitely in weakness simply because the dollar is getting stronger. When I say we are in weakness, I mean the markets are in weakness. Okay, so this is a chart of the VIX. Basically, we had this 1577 level. We broke down from that level, but then we did not confirm, meaning we did not get a close below that candle. Again, any breakout, I need a confirmation candle, a close below or a close above the high or the low of the previous day's candle. We came up, but then we came back down. You see how that worked? So we had a little bit fear in the market, but then we kind of came back down. So it wasn't really a fear. When you see fear in the market, you're going to see candles like this, okay, or candles like this. I mean, these huge candles like this, that's showing fear. Like all these candles here, this is fear. There's fear in the markets here right now. This is not fear. This candle here is not fear to me. So when the fear comes back into the markets, then we should see a substantial drop. Right now, we may get some resistance here on the VIX before pulling back down, so that's also a possibility. Again, if we find the VIX can pop up and close above the 20 moving average and then confirm above it, then your next stop is probably this double top here, in which case a 15 moving average should come down at the same time, giving the VIX some resistance on that level over there. So that's something that we want to keep an eye on as well. All right, now to talk about some stocks. WMT, which is Walmart, had a nice day in a weaker market, which is it was up 72 cents. It's almost as if Walmart is the new gold, right? Everybody runs to Walmart. No, I don't think so. And this is why I think there's a possibility that Friday was just simply a take a profit day, that kind of thing from the whole week being up. Everybody wants to take profits, or this is institutional game playing where they wiped out Walmart on Thursday to get everybody short on Walmart, and then they just pushed it right back up. So that's also a possibility. However, I still think Walmart is in somewhat of some weakness, and that's because when we had this down day, this is what I'm talking about volume here. When we had this down day, it would have been nice to see a close below the $70.56 level. We didn't get that. We actually got somewhat of a tail here, but this isn't after a down move, okay? So this is just the beginning of a down move in my opinion. We had this is substantial volume here. It wasn't higher than this volume here, but it was substantial volume from all these days over here, okay? So that's telling me that there is a potential of more downside. Of course, nothing's 100% guarantee, but this is the first move down, and I did say in previous videos that we may start consolidating before pushing back down again. We actually had a gap up on Walmart on Friday, and we continued higher, but we still did not close above Thursday's candle, which tells me that this stock is still in weakness. So I'm still short on Walmart, and we'll just see how Walmart plays out. We may consolidate. That's what my hope is. That's what the charts are telling me. I would much have rather seen. Actually, did we gap up? No, we actually gapped down. I'm sorry. My bad. We actually gapped down, and then we pushed our way higher. So what I would like to see is some consolidation, maybe another day or two before pushing back down. And the reason why I like to see that before pushing back down is because it validates the potential of breaking through this $70.56 level, which is a pretty substantial level in my opinion. Okay. Now this is a daily chart of Seagate. We had another down day of Seagate. It wasn't impressive. It was only down 36 cents. We have these two calculated levels here, which should have some support. One thing that scares me about Seagate is these two moving averages coming together here and this bottom trend line here. So again, I was hoping or was predicting that this next leg down should break down from this bottom trend line here. But when you look back on the markets, if the markets get a bounce off their trend line, or if the SPY gets a bounce off their bottom trend line, then Seagate would probably get a bounce off this support area as well. So with these two moving averages coming together as well, that should give a little bit more of a floor for Seagate to possibly get another bounce. So this is the time where it gets really, really tricky because it's right in the middle of support and resistance. It's really a matter of which way is it going to go next week. If we look at Mondays and Tuesdays data, we'll probably be able to determine what's going to happen for the rest of the week, and unless there's some, major news that comes out. Okay, so that's Seagate. This is the Seagate weekly. We are still bearishly consolidating with this bear flag. Again, if we get a close above this candle here as a confirmed candle, then I'm out. Okay, that's the bottom line. All right, this is a chart of racks. If you look at the previous video of racks, I had all these lines over here. I mean, a ton of lines here. And like I said, in the beginning of the video, I have these purple lines. 45.20 is the first purple line. The close of this candle was 40. Let's see, 45.14, so that's 6 cents off. The next level I have here, and these are test calculations based off of the original calculations. Hopefully, it's a little bit more accurate. I have another one here at 46.73. I wouldn't put money on it, but it's just something that I'm going to keep an eye on to see if these calculations work out or not. All right, this is the weekly chart of racks. We have this down move. We have this beautiful bearish consolidation right on under this 50 moving average. This is why if we get back on this 45.20 level, I may actually take a short trade on that 45.20 level. If not, if it can get in, if the markets look strong on Monday, we get a nice pop. And this is if we get a pop on Monday due to low volume or whatever the fact may be, then this 46.73 level is probably where I'll take a short because I don't think it'll close above the 50. But if it stays under the 50 moving average, then I think Rax has more downside to come. The earnings is August 7th, so I got some time. All right, this is a chart of Nike. This one was very disappointing. This is a weekly chart. We had this nice down move of this bearish flag or bearish consolidation pattern there. This is a daily. This is why it was very disappointing because I had this alert here at 96.01. I kind of tried to put it right in between these two mathematically calculated levels here. Where did the high of this candle go was 95.98. So I missed it by 3 cents. This is an alert. I didn't get alerted because it didn't trigger by 3 cents and then it turned over. Unfortunately, there's going to be a lot of analysts out there that's going to brag about their stock picks, when they, and I just want to let you guys know that don't get caught up in the hype. Even though the stock picks that they picked actually turned over, just keep in mind that pretty much everybody's mother's uncle's stock turned over on Friday. Okay, so I mean, you're gonna have 90% of stocks following the actual market. The market was down, so obviously 90% of the stocks will be down. So those analysts out there that brag about, and I've seen them, and when they brag about the stock picks that they make, and they say come join and pay all this money to join my club because I picked this one stock and it turned over on Friday. Well, unfortunately, every other stock pretty much turned over on Friday as well. So just keep that in mind before attempting to sign up for anything. What I do here is absolutely 100% free. All I ask is maybe if you can do, one act of random kindness, walk a old lady across the street, or if you see somebody, that needs donations for Red Cross or whatever. I mean, if all you got is 1 cent to afford, then, if you can just drop 1 cent in there, then that's all I ask. Just try to do something good out there. If you get anything positive out of my videos, then that's all I ask. In any case, moving on. All right, this is a chart of Monsanto. This is MON. I do have a purple level here, which is 88.12. It's just something I want to keep an eye on. I do believe that this is actually pretty good resistance in normal charting as well. Okay, so this is the weekly chart. Let me see if there was one. I believe there was. Yeah, we have a level here. So this is pretty much like a double top. Let me get more data here. So yeah, so we have this pivot top here. Looks like it pierced through that. But you see these two here, this is already a double top. That's already been used in my opinion. We have a pivot point here. So actually Monsanto may actually get all the way up to this 93 level. But this 88.12 level, that's just something to keep an eye on. If we get a push into this 88.12 level, say we create some sort of doji on Monday on higher volume, then I actually might take a short trade on Monsanto. We're not gonna get earnings until what is that, October? Okay. This is a chart of MasterCard. I had this purple line at 421.85. It's also on this bottom trend line here. Let me switch to the daily chart. All right, this is a daily chart of MasterCard. We have this bottom trend line here, so it has a little bit ways to go. It's also in the 50 moving average, and I have a test mathematically calculated level at 421.85. So if MasterCard gets a bounce tomorrow, then that would validate that these support levels are holding up pretty well. I wouldn't put money on it simply because it would be a counter trend trade. However, MasterCard is one of those stocks that are in relative strength. The bad part, I mean, this MasterCard um, chart is very similar to the Apple chart, where you have this down move and this bearish consolidation or bear flag here. If MasterCard closes below this bottom trend line here and then confirms, then your next stop is going to be this double bottom here. And I may consider, actually your next stop will be this 200 moving average. I may actually consider taking a short trade on MasterCard. You just have to remember that MasterCard is one of the more expensive stocks. So if you're going to buy puts on this, you may lose a lot because MasterCard moves so quickly. Their average is $10 a day. So you just got to keep that in mind. All right, this is a chart of Lululemon. We had these two mathematically calculated levels here, which held up. Now, here's the thing. I'm going to be honest with you guys. I did not know about this mathematical calculation until this day here, which was Friday. I actually made these calculations on Friday, and you can tell by these lines here. I will start the line on the day that I calculate the level. So basically, this line starts on this day, which was Friday. This line started on this day, which was 7/12. So you can pretty much see when I actually calculated the line or not. Had I calculated the line earlier, then I would have been able to take the short trade on Lululemon, but I was unable to. Now, the reason why I'm showing you this stock is this. That stock was definitely used up, meaning this level I wouldn't trade it anymore. But the reason why I'm showing you this stock is on the weekly chart we have this upper trend line here, which means on the weekly, if we close below this trend line here and we confirm, so that's going to take 2 more weeks, and then we have earnings in September, which gives us a lot of time. This means that Lululemon will probably start breaking down. Okay, so we may start consolidating above this trend line here before breaking down. So this is the weekly chart. It's just something to keep an eye on. The weekly chart is going to definitely take a lot more time and a lot more monitoring to see if it's going to actually drop or not. Now, on the daily, if we get a push into this upper trend line here, then I may actually consider taking a short. It would really depend on how long it takes for this 20 moving average to come down. All right, more confusion for you guys. I said in previous videos that I didn't do any type of analysis on JPM. However, I did on Friday. All right, so we have this purple line here, and here is the test, right? And it actually broke. It closed below this purple line here. So JPM. Okay, so here's a contradiction. You have this upper trend line here. JPM has literally broken down from this trend line here, which most people took shorts. Again, my style is I need confirmation, which means another candle closing below the low of this candle here. So if Monday we close below this candle here, yes, we could pull back and retest this upper trend line here, in which case I'll probably take another short. But it also still validates that this breakdown has happened. Okay, and if that happens, then we'll pretty much have some pretty good resistance up here if it can catch a bid and go up there. So this purple line right here didn't hold up, uh, but it hasn't validated the failure yet. If JPM catches a bid tomorrow, then this purple line would be valid. And we also have these two gray lines here, and then this pink line and this gray line put together here. So I think that JPM definitely has a possibility of getting this low before getting a bounce to retest the going to be resistance point here, or which is now resistance here, which is and previous support back here. Okay. And the reason why I'm showing you the JPM chart is obviously they are the leader of the finance sector, which basically, if if the finance stocks can't catch a bid, then I highly doubt that the markets have any um, you know um, potential of going higher. Okay, this is a chart of IBM. It went right into these two mathematically calculated levels. I talked about this in previous videos. It broke out of this upper trend line here, which is something I talked about. We did not confirm above this candle here, and now we're just breaking down. We've pierced through the 50 and the 200 moving average, and we're coming right into this 20, which should be, in theory, minor support. And then, of course, we're going to have some support at this gap fill here. And that's the IBM. Now, one thing about IBM that you have to remember again, it was just right into earnings a few days ago, and these mathematically calculated levels normally don't work when you have earnings. Okay, so just keep that in mind. The calculations do not work when there's earnings because there's a big spike in emotional change for whoever owns or would like to own or would like to sell the IBM stock. All right, I'm still keeping my eye on FCX. I really, really want to short FCX. I still have my levels all the way up here. The way it looks right now, I highly doubt it gets there, but rules are rules. I have to follow my rules, and right now it's saying that unless it gets into this level here, I'm not shorting FCX. This is a chart of EXC. I like this chart because it's going higher, and let's see, August 1st is earnings, and if it gets into this level here, well, you know what? The 200 moving average is so close, but I may have to consider. You know what? To be honest, we have a pivot top here right at the 200 moving average. If we can get around this area here, then I'll probably be taking a short. Even though these mathematical calculations are here, I may have to relook at this and maybe recalculate. I don't know if this is accurate or not, but I know I have to trust my calculations because I normally don't trust my calculations and they get a bounce off of them. But facts are facts, and I need multiple factors, not just my calculations, to telling me that it's may pull back. I mean, I need a little bit more than just my calculations to tell me that. And right now, this pivot top ends 200 moving average. If my calculation was up here, then I feel a lot better about it. I wonder if there's maybe a Fibonacci retracement here that we could take a look at. Let's bring it down here. Well, yeah, the 382 level is right around this area here, so this is going to be really strong resistance. I mean, we may turn over earlier uh, than that, which would validate these calculations. But you know what? I'll just stay in cash for this stock right here and just keep an eye on it and see what happens. Now, I think this is a chart of EOG. I think this was the chart that I really liked, that really looked good. Let's see here. The reason is we have this. Okay, so the reason is we have this bottom trend line up here, and we have the 200 moving average right there, and we have these mathematically calculated levels right here. So what this tells me is we're gonna have come into a lot of resistance up here. We are also in an oversold condition. Okay, so we have a lot telling us that this is gonna be a pretty good resistance up here. And if you look at the weekly chart, oh yeah, this is beautiful. The weekly chart is showing this 20 moving average, this bottom trend line here, and these calculated levels all in the same area, which is telling me that there should be pretty good resistance over here. And this is why I like the EOG chart. But you have to be careful because the EOG does have earnings. I believe this month. I'm sorry, next month on the 2nd. So keep an eye on EOG. This is a daily chart of Baidu. I have some levels up here and the 50 moving average there. Actually, no, we don't have Baidu because Baidu has earnings next week and I do not play earnings. So skip that. All right, this will be the last stock I talk about, which is the infamous Apple. Let's see. So Apple came down off of this 612.34 level and was down about $10. It's not a big deal at all. Apple has, I believe, earnings next week Tuesday. So keep in mind that next week or this week, because it's Sunday, we're gonna have a lot of earnings from a lot of big players. Apple is one of them, and because Apple is one of the biggest stocks in the S&P 500, it is going to drive the S&P 500. So if Apple gets good earnings, expect an up day tomorrow, unless either that or a flat day tomorrow. And it's well, not tomorrow, after earnings. I think it was after the market closes on Tuesday. Expect possible upside simply because Apple is the strongest, or expect some type of doji where Apple will fight against all the other stocks, because Apple is the biggest stock. It could, if Apple screams higher and all the stocks, sell off, we may actually break even because Apple is such a big stock or big player. Or if Apple sells off, everybody starts panicking, and then there's panic in the markets, and the VIX spikes up, and the dollar starts you know getting higher or increasing in price, then Apple will just take down the markets as well as everything else, and then that's when we should see the bleed out. If Apple, in my opinion, starts has bad earnings, I doubt it, but we can only see what charts are telling us. And again, I don't play earnings, but if Apple closes below this bottom trend line here, then I think that's it for the markets, in my opinion. So that's something you have to keep an eye on. Earnings is next week from big players, so it's just something that we have to watch out for. And I'm definitely way over my time, so thank you very, very much for watching these videos. I really appreciate you stopping by and taking out the time. Um, you know, um, God bless to you all, and thank you very much. And I hope to see you in the next video.